health and a little wealth and a lot of love.
Well, let's dig into the debt trap, and maybe give us a little bit more background information and tell us what is debt and how does it affect how good you are with money.
Yeah, so a lot of people know what debt is, right, at this point, but I think it's good just to start the foundation of debt. So debt is where you apply for certain credit, and the financial institution, whether it's a credit card, auto loan, school, it looks at your number, which is called a FICO score, which we'll talk about that quite a bit. There's two scores out there. One's a FICO score and one's a Vantage Point score. I'm really going to focus on FICO score since it's been around the 1950s. It's been around forever. But everyone has a walking score on their forehead. You know, just imagine people going, I have a score. And
what's the difference between those two?
Well, the difference is one's been around for 1950s. The other one is it's created back in 2006 with the three credit bureaus. It's kind of compete with FICO, if I'm being completely honest. And there's different data points that the Vantage Point score uses. So it's like Experian, TransUnion, and another one. I would just for simplicity of today, it's just focus on the FICO score.
Okay.
So how debt works is you go and you apply for a good and service, and you want to put it on credit on agreed upon interest rate based upon your agreed upon terms with the bank. And how that process works is you fill out an application. They'll ask you questions about your income, about your debt to equity ratio, and then they'll look through a lot of different parts of your credit score. Your credit score is a big indicator of how your relationship with the bank is and what you can ultimately qualify for. So, for example, if you buy a house, and let's say you have a really high credit score, maybe you take advantage of a lower down payment or lowest interest rates. There's a lot of things you can say about credit scores. I think it does punish people who don't necessarily have a good credit score. And if you look at the analysis of credit scores, it's all over the gamut. But usually, like the underserved communities have lower credit scores.
Makes it hard to get your way out if you don't get any benefits.
It does. And then that score does follow you. And there's some things that I want to teach you guys around how to manage those credit disputes. That's my bonus, by the way. I have 6 things, but the bonus is the credit disputes. I've been a victim of that, and I will absolutely walk through my own personal example. I am passionate about that. But yeah, so that's a little bit about debt, about how you apply for it, what they use. There's 2 things I do want to say else. There's a hard money line and a soft money line credit. So if you apply for credit, always ask that question. Are you a hard line pull or a soft line pull? A soft line pull is they do a peekaboo and they look and see to make sure, based upon your credit score and your history and all that. Your hard line is a hard line hit, which can impact your score, which again, that's one of the 6 things I'll talk about in a minute.
With a little health and a little wealth and a lot of love, that's the life that we live, suits and scrubs.